This is NDTV. And you're watching NDTV Prime. In association with Micromax. Nothing like anything.
Welcome to the Realty Debate on NDTV Prime. I'm Manisha Natarajan. The big questions we are focusing on, or the big question we are focusing on, has the Finance Minister missed an opportunity to use real estate sector as a trigger for economic growth in the Union Budget 2015? Some of the long pending demands of the sector, making SEZs more tax-friendly, bringing back tax breaks for low-cost housing, infrastructure status to affordable housing, have been ignored yet again. And what's more, the emphasis seen on housing and smart cities in the previous budget is also missing this year. But let me not play the party pooper here. Let's get across to my panelists for their opinion and analysis of the budget. Joining me, Anuj Puri, Chairman and Country Head, JLL India; Niranjan Hiranandani, Co-Founder and Chairman, Hiranandani Group; KV Srinivasan, CEO, Reliance Commercial Finance; Rajiv Talwar, Group ED, DLF; and Gitambar Anand, CMD, ATS Infrastructure and President-elect Redai. We will go to the real estate specific provisions in the budget in just a moment. But let's take a look at the larger picture. The GDP numbers or forecast has been good, and the inflation number is also looking very good. Mr. Hiranandani, directionally, did you feel that the budget is in the right path or on the right path?
I think the Finance Minister has talked very well. I think he's covered all the aspects of it, but I think what has happened is a touch and go. I don't think he's been able to get the depths of many of the things that he needed to do, but I think there are lots of good things which have come into the budget which were not there earlier. For instance, the idea of pension funds, I think that's fantastic. India doesn't have social security. I think we needed to get something to walk the talk long back. I think that's happened. A lot of people, Provident Fund was thought to be great for salaried people, but people didn't take home enough money and they were worried about what to make two ends meet while they were looking at Provident Fund being collected. I think changes have taken place there. Okay. On an individual basis, I think a lot of positive things have happened. I think there's a lot of things which have come in terms of investment opportunity. I think a lot of people will look at India in a very positive way after these clarifications have been issued in terms of investment. So I think these two areas I think are very, very, very positive.
Very positive.
Of course, I think he's missed the bus in many things. But having said that, I think there are positive stories which have taken place in the budget as an overall. So really good in that respect.
So let me go across to Rajiv Talwar. Rajiv Talwar, I was hoping that Mr. Hiranandani will talk about what everybody is saying, that this is really not an Aam Aadmi's budget, it's a corporate budget, simply because corporate tax has actually
been lowered.
So is that a big positive as you see?
I think it's a direction giving budget, and it's a budget which has a long-term perspective. It's not a budget which we'll have to read the fine print in the annexures which the FM kept on repeating time and again in his speech. I think we'll have to see the fine print, but yes, it lays a direction, it abolishes wealth tax, it gives you plenty for agriculture, the social sectors, insurance, also medical health cover. Then as Mr. Hiranandani said, on the pension funds, and lots of savings instruments.
Right.
He said we'll have bonds in plenty. Plus, what he's done is really commercial space at the moment. He said last time it was a provision of pass-through taxation in REITs. He said maybe they were left incomplete. He would like to complete them. So we'd like to see how it goes in the budget. But overall, yes, a direction-giving budget, and with the government having 4 years, I'm sure that as revenue collections go up, we would see a moderation at all levels the same way as it's happened in corporate tax, because tax rates really have to be brought down to international levels.
All right, I thought we were pretty modest when it came to tax rates globally. even if you place India. But Gitambar Anand, you know, everybody spoke about the fact that this is the golden moment for the finance minister. He has no political compulsions yet.
Yep.
The nearest election is in November. He also has every economic factor on his side, whether it's oil prices or its reserves, forex reserves or current account deficit. And therefore, I think there was just so much expectation built in. Has there been some kind of disappointment that, look, that's what we were expecting and this is what we got?
See, we'll keep housing out of it as of now.
Right now, overall budget.
But I think it is a fairly good budget because a very big thing that he's done in this budget is, clarify the ambiguity on taxation, in retrospect. Whereas like GAR, he's deferred it for 2 years and he said GAR will be only prospective, not retrospective. So it gives a lot of clarity to our foreign investors and other investors. It's a very big thing. Everybody's talking about social security and insurance, and very good. Infrastructure. He's actually, talked about infrastructure very, very in depth and seriously, and about raising capital for infrastructure.
And he's not in a hurry to reduce deficit. He's saying, I will meet my target surely and steadily, but I need to increase public investments.
We like that. It is very doable. Whatever he said is very doable. So, like I said, if you keep housing aside, it's a good budget. And I think in the next 3 to 4 years, we will see some very positive results coming from this budget. There will be a trickle-down effect because of the infrastructure spend. And you said it's not an Aam Aadmi budget, it's a corporate budget. I totally disagree. I think it's more of an Aam Aadmi budget than a corporate budget.
Okay, let me get Anuj's reaction to it. Anuj Puri, I've already read the note that you've written, but sum it up for us. Your overall impression of the budget directionally, is it right? Do you think that the next 4 years there will be a trickle-down effect, which is a must, and you will have the investment cycle kicking back into action? I think that's the big issue, not just with real estate, but across the board.
So, Manisha, I would say two things. One is that he's brought in a lot of certainty. So, if you look at it, his full speech had a lot of certainty in that is. And the second is that he's not looking at it just like a 12-month budget. He's looked at it more long-term, 3, 4, 5-year horizon that he's got in. If you look at it, GAR, he said 1st April 2017, not retrospective, as Gitambar said, is prospective. He's got the GST, 1st April 2016, so that's a given. The third is really on the infrastructure. He's focused big time, 70,000 crores. He also said in the same sentence that this is still not enough. More needs to be done. And what I really liked on infrastructure was his candidness to say is that the PPP, public-private partnership, hasn't worked. The government has to take more risk on its balance sheet. There has been an imbalance between the private and the government sector, and government really needs to take that onus of making sure that the public-private partnership is working. Right. So as Gitambar said is, and as you said at the start, Manisha, we're going to keep the real estate for the second part, but overall, directionally, a lot of certainty, and I think the foreign investors would love it. And second is, it's not a 12-month budget. He's laid down the vision, whether it was on the corporate tax, whether it was bringing the fiscal deficit down, all that he's given it over a 3-4 year horizon, which I really like because it's the first time that a finance minister has gone beyond the 12-month period.
All right. And also just the certainty with which now GST looks like it's going to happen by April 2016, the amount of money he's willing to part with when it comes to states and that honor that federal system. Mr. Srinivasan, what's your view? I mean, SMEs, that must come as sweet music to you. There's a large size of your business, and just the fact that there's a little bit more money in the hands of the end consumer, the large middle income India, which also is great for businesses such as yours.
Absolutely. I think it is probably for the first time a budget has focused so much on the small and medium enterprises and infrastructure. I think these are two game changers as far as the Indian economy is concerned. And they possibly have the potential to have the maximum extent of positive ripple effects on the economy. The moment you talk about SMEs, you are actually, taking away this whole issue of employment creation out of the larger so-called established business houses into the real potential area, which is the SMEs. Because SMEs, as you are aware, have the maximum potential to employ people, and that's something which is a very large impact creating thing in the future. Second factor is the admission that the PPP needs to be revamped and so on and so forth, and the whole concept of a pre-cleared, all clearances obtained kind of UMPP, I think it's a big statement to make. You are essentially hearing the finance minister say that the government will actually put its money where the mouth is, and that's a phenomenal confidence building thing. The third factor is that this whole focus on the social inclusion or financial inclusion, as it were, and the moving away from the old established system of ESI and those kind of things towards a more modern self-funded health insurance, for instance, is a big change from a philosophical sense. So I think these are some of the key factors that have really driven the budget. And I really see these directions actually providing a huge amount of boost to the Indian economy in the next 2 to 3 years.
Mr. Hiranandani, I'm going to come back to you. And my question to you is that I've read a couple of reports which have kind of surprised me. The extra corpus which has been allocated to MNREGA. Now, there is this whole debate that actually it's the real estate sector which faces the brunt of labor not coming to the construction sector. Is that a boohoo or is it real?
You know, what has happened is in the last couple of years, we have mechanized and reduced the requirement of labor by almost 60%. While people are unemployed in the country and they are being paid by NREGA, the amount of labor that we are getting is just not happening. NREGA may not be the only issue, but it's definitely a big contributor to it. But I don't think the government politically are savvy enough to be able to say that we need to reduce that particular contribution. On the other hand, let's put it this way. In many cases, people are underemployed, are not getting jobs, or they are still underemployed and do not have able to make 2 ends meet. So in order to get social security off the ground, NREGA may have to be done. But the question is, if there are people we need to employ, and at the same time government is giving social security for unemployment, I think this is 2 ends not meeting the day. There, I think what they are looking at is to be able to skill these people in order to get higher salaries and encourage them to come into the network of labor employment and try to make true to make. But I think it's a political issue wherein they had to do NREGA and continue it. They have enough problems on the land acquisition bill and they couldn't play with NREGA anymore. I think it's a political statement, but nevertheless, giving social security to the poor, nothing wrong with it. But we are finding that we will have to mechanize. It's happening on the road side. We are doing it in the real estate side. And over a period of time, you'll see higher mechanization taking place in construction. So labor component comes down, capital requirement and input comes up. And how do we do? The problem is only, do we want to employ this labor lucratively? Politically, is that possible or not? I think the politicians can answer. I need more labor, I'm not getting them.
All right, okay. So that's a fair enough comment on MNREGA and how actually it impacts the real estate sector in terms of labor or skilled labor for the sector. Okay, Rajiv Talwar, you know, Mr. Srinivasan touched on this point and I would just like your opinion on it. Approvals has been a huge issue. It adds to the cost of delivery and all of that. So we've discussed that n number of times. This statement which says e-biz portal to integrate 14 regulatory permissions, how does that translate to the sector?
Well, let's see if it even touches the sector first of all.
Yeah, because 14 permissions is anyway too less a number for real estate. I mean, they're 40 plus.
Yep. So I think what permissions are these? Are these in finance sector?
You're talking about ports.
Yeah, or ports or financial sectors, or what is it? Is it inclusive
no,
of...
he actually said that for just generally ease of doing business.
Yeah,
I think
ease of doing business. Yes.
Yeah, it was when you want to get, corporatize ports and when you want to get minor ports. So he was talking of that. Let's hope so, that at least the permissions in the central government are given across on a single application.
Okay.
If that can be done, that will be a great direction finder to the states. Because there are various statutes. Some states like Punjab have gone ahead and amalgamated those, given the powers of giving permissions under 14 or 15 statutes to one person.
Did you get the impression, Gitambar Anand, that this is at least the government is seriously thinking about improving the ease of doing business?
They have to.
Yes, definitely. The unfortunate part is that our industry did not get this feeling. In fact, if you don't want to talk about it in this session, I'll wait for the next one. But yes, for industry as a
From the
whole.
budget, you haven't really got that impression as of now. You need way more clarity. Isn't
Yeah,
it?
we do. We have to read the
everyone
fine print, and these are things which we are assuming. A lot of things we are just assuming. So let's wait for the fine print and look at it then.
All right. Okay, we look at the fine print, but on the other side, I think we have to look at the very big announcement which came at the beginning of that budget
Correct.
speech, but really didn't have a follow-through. Housing for all by 2020, 2 crore urban homes and 4 crore rural homes. Just wondering, who is going to be making these homes? Currently, hardly any developer operates in that segment in the true sense. We're going to come back and look at that. Everything else about real estate sector will be our focus.